Hi, this is Troy Eckard. I'm the CEO of Eckard Global LLC out of Allen, Texas. What I'd like to talk to you about for just a couple of minutes is what's going on in the oil and gas industry as of March of 2018. Many investors with capital are trying to decide, has the rebound in oil and gas, has it really taken place? Do we really have a soft or a hard foundation from which the commodity prices have been set? Or are we dealing with some underlying issues that may cause the market to correct or retreat? What I can tell you is the following. We're sitting just under 1,000 active drilling rigs in the continental United States onshore. That was an increase from 417 active rigs 2 years ago, so that's over 120%. We have the most active and the most efficient drilling rigs with the best crews in the industry working and handling and managing those rigs that we've had in probably the last 20 years. Most of the older engineers and rig hands have retired. The rigs that are being used have all been retrofitted or have been put together with the various components to make them the fastest, most efficient, best horsepower, newest equipment, and the most modern technology on each one of these drilling rigs that's available. There's not anything this industry is going to be able to do to get any better efficiencies in both terms of cost, drilling, output, extraction, fracking, completion. Just really not going to happen. We have, as an industry, done a tremendous job in the last 3 years taking this downturn to make our industry as well run and as efficient and as economically viable as possible, which is one reason why we have been able to weather the storm and we're now seeing a rebound. So as a capital investor, the question you have to ask yourself is, do I get into the oil and gas industry at this point? Are we at the low, headed up, or have we already bounced off the bottom and we have further pace to go? I will tell you two things. All the indicators at this point tell me that we will be 12 to 15 million barrels a day in output in the next 5 years. That means we will be producing somewhere between 60 and 80% of U.S. domestic consumption from U.S. producing wells. We have a brand new budget over $1 trillion that has just been approved and passed. We have a president and his administration who have said, we're going to rebuild our military. We're going to build our infrastructure across the United States. What that means is massive trucking. That means massive fabrication. Enormous amounts of new projects that will be put to work over the next decade, all of which are going to require everything from industrial production and output to transportation, installation, fabrication, and utilization. All those things together mean internally inside the United States, we're going to see an increase in the demand of hydrocarbons, natural gas, oil, crude, plastics, byproducts, all that's going to be used. If I'm looking at the next 10 years, not the next 6 months or 12 months, I believe we will see some inflation continue to increase almost assuredly over the next 5 years. I believe interest rates are going to rise. Cost of capital is going to get more expensive. I believe that oil prices go hand in hand with rising inflation. As inflation goes, the dollar comes down, and of course crude oil prices go up. The disparity between crude oil and natural gas is enormous. We're talking about maybe a 4 to 5 to 1 differential. Whether it's a gas well or an oil well, as long as the economics are related to today's prices, I believe the commodity risk is very minimal going forward, meaning that I can make money at today's prices even if I lose 10 or 20% of commodity prices. I'm still going to be in the black making a profit because these drillers and these exploration companies have geared their economics toward $40 oil, $2 natural gas. So I believe we've hit the bottom, we've rebounded, we have found a nice plateau that we're at right now, around that $60, $65 range, $2.65 to $3 natural gas. You'll have highs and lows either side of it. But at the end of the day, this industry is back. It's probably stronger, better balanced, more balanced, probably more efficient today than it's ever been. Now, I will tell you this. My only concern and my deepest concern 5 to 10 years out is that there is a lot of aging that has taken place in the oil and gas industry. There is a huge disparity between the experienced guys that have 10 plus years, 20 plus years, or guys like me, 30 plus years in the industry. When you start looking at the table in an operating room and you notice that everybody in there is signing up for AARP or they're looking at their Social Security benefits because they're now 60 to 70 years old. And the next generation that's sitting at the table has graduated in the last 7 years from college as a petroleum engineer, civil engineer, chemical engineer, geologist, geophysicist. We know there's about a 25-year void in expertise and experience. That means that not only will we have a shortage of personnel, which will drive up costs from the intellectual side, but we also are going to be missing decades of experience standing on that rig floor, looking at those geological maps, understanding the geophysical aspects of drilling a well. I think we have a window. It's the next 5 years to make the best bang for our dollar in drilling, exploration, mineral acquisitions, production, and buying in pipelines and infrastructure. I don't say it's going to be bad 5 to 15 years out. I simply say there will be an added component of risk as we start to see the absorption of these high experienced and expert intellectual assets such as these engineers and geologists as they start to retire and go to the house and throw a fishing pole line in the water. So today, if I were to give you one simple answer, that is, I'd be headstrong, bull strong on energy. I'd be buying into production companies that have long-term services that will be servicing these oil and gas wells, because there's literally hundreds of thousands of them to drill. And I'd be looking at fabrication of the equipment that goes in these wells, because quite frankly, everything is brand new. There is no used equipment market in the steel business in the oil and gas industry. So my name's Troy Eckard. It's my opinion. Take it for what it's worth. I've been doing this since 1985. This will be 33 years in the business, and I've seen lots of ups and downs. But what I know is right now, I am very, very positive on what we can do as far as building value. We're not buying at the bottom. We're definitely buying on the way up. Have a great day. Thanks for talking.